Hi, I'm Madeleine van der Walt, and I would like to discuss a few of the budget highlights of 2015 with you today. For the first time since 1995, the Minister of Finance decided to increase the rates of individual income tax. The 18% bracket stayed untouched, but from 25% to 40% has been increased by 1% each. That means the highest rate of individual income tax in South Africa at the moment is 41%, where it used to be 40% last year. The medical aid tax credits have been increased though, which means that there's a bit of tax relief for those of us who contribute towards medical aid funds. The Minister of Finance also announced a proposal to reduce UIF contributions for the upcoming financial year. He wants to decrease the monthly income ceiling on which UIF contributions are calculated. He proposed that the maximum earnings limit on which the UIF contribution is calculated every month be reduced to only R1,000. That means where the maximum contribution is now R148.72 per month, we could only be paying R10 per month if this proposal comes through. We are waiting for more information about when this proposal will be implemented. A surprise announcement in the budget this year was the high increase on the fuel levy. A general fuel levy increase of 30.5 cents per litre was announced, as well as a road accident levy increase of a whopping 50 cents per litre. This increase will only become effective in April this year, but that is in addition to the general increase we've seen in March already. The Minister of Finance also reduced the turnover tax rates for micro and small businesses. The highest rate has been reduced from 6% to 3%, which is a massive decrease in turnover tax for small business. He also increased the turnover threshold by doubling it from R150,000 per year to R335,000. This is massive relief for all small and micro businesses in South Africa. The limits for subsistence allowances have also been increased for the upcoming financial year. The limit for a non-taxable allowance that covers any expense for incidental costs is now R109 per day if the employee travels within South Africa. If the allowance is to include the cost for meals as well, then the new limit for non-taxable allowances is R353 per day for travel within South Africa. To obtain the limits for travel abroad, please visit the SARS website. To assist with managing the demand of electricity in the country, a temporary increase of 2 cents per kilowatt hour on the electricity levy has been proposed, which means the current levy will be increased to 5.5 cents per kilowatt hour. Effective the 1st of March, the calculation for employment tax incentives has been amended to include a time test when doing a gross-up calculation. This means that any employee who is employed to work less than 160 hours per month should be subject to the time test when calculating the ETI claim for the month. If an employee, for example, works only 10 hours a month and earns R1,000 per month, that employee was eligible to be included in the ETI calculation. From March onwards, you need to take the R1,000 and gross it up to the equivalent value of 160 hours worth of pay before you determine whether the employee qualifies to be included in the calculation. If the employee still qualifies, you then need to apply the time test to the calculation as well when you calculate the final claim for ETI. If you've not yet heard about this, the much-awaited retirement reform legislation has been postponed until at least the 1st of March 2016. That means we can't expect any additional relief for our retirement fund contributions. We know, however, that from March this year, The tax-deductible portion on income replacement policies will no longer be allowed. The company contribution, however, will still be taxed as a fringe benefit. Some very welcome relief was announced for property owners. Previously, only properties with a value up to 600,000 Rand were exempt from transfer duties. The Minister of Finance actually increased that limit to 750,000 Rand. Properties between the value of 750,000 and 2.25 million will also attract less transfer duties this year. Those of us receiving reimbursed travel allowances will also see a bit of an increase in our taxable earnings this year. The Minister of Finance announced a reduction in the rate to be used to reimburse travel expenses for employees. The rate used to be set at R3.30 per kilometre, and now it has been reduced to R3.18 per kilometre, which means any amount used to reimburse higher than the set rate will be taxed. A few days before the announcement of the budget speech, National Treasury actually released the long-awaited papers on tax-free savings and investment accounts. We now know that from March this year, all financial institutions can offer a product in which we can pay our savings each month, and up to 500,000 Rand per lifetime will be tax-free. Only 30,000 Rand per year is allowed as a tax-free contribution. Unfortunately, we're not allowed to transfer any of our existing savings into a new TFSA product, but we're awaiting new legislation that will be announced in 2016 about the transfer of tax-free savings accounts.